Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Air Canada. I've had a lot of people request that I do a video on them, and I've kind of been sitting on the sidelines for a little bit. So this video is going to be about Air Canada, their recent results, where I think they're going in the future, and whether or not I've invested in them for the long term. So taking a look at the stock as of today, it's up about 15%, a little over $23 a share now. Man, we've seen this thing rocket since the lows. I was actually looking at it when it was extremely low. I think it was near $10 a share or something like that. I realize that a lot of these figures that I'm going to give you guys today are backward looking in terms of some of the valuation metrics. However, later in the video, I'll get into it why I'm going about it that way, because I am obviously always looking into the future. So that's kind of one of the reasons that I'm using these types of metrics, because it's my expectation that inevitably it will get back to normal, but we'll get back into that a little bit later here. So taking a look at some of these measures, this is what really initially drove me to this company. You're looking at a company with a market cap now about 6.93 billion. At one point, I believe their market cap was less than the cash. That should be a little like a red flag, what's going on, or in terms of this could be a great investment. So right now, I think they have over a little over $6 billion in cash, and their market cap is about $6 billion. So that's pretty crazy to see that. Of course, the forward PE is about 53, and the trailing is 79. I don't know how much we can take into those because we don't know exactly what is going forward. Again, price to sales is at 0.38. These numbers are so low that they've really attracted me here. The revenue, and this is a trailing 12 months, is about 18 billion. Of course, we're not going to see that going forward, but again, keep in mind the whole market cap of the company is around $6 billion. They have, like I said, cash of about $6.13 billion on the balance sheet and about $10 billion of cash, so debt rather. So they have quite a bit of debt, but that's to be expected in this sector. And it doesn't concern me that much going forward, but we'll get more into that later as well. So now we're going to take a quick look at their last quarter, which was supposed to be this disastrous quarter. Keep in mind that this is for the first quarter of 2020, so it ended in March. So this whole pandemic thing was really starting to take effect in March, I guess February, March. So you got to keep in mind going forward that the next quarter we're going to see a lot more of the effects. I don't know if people are taking that into account when they're looking at this stock, but that's something to keep in mind. So taking a look here at their balance sheet. Again, like I said, they have cash and cash equivalents of about well, this includes their short-term investments as well, a little over 6 billion. Cash and cash equivalents, they have about 2.5 billion and 3.5 billion of short-term investments. And that's actually up year over year from last year, which was a good thing in this case. You can look at some of their current assets and non-current assets here, but I'm looking at their total assets of about 28 billion versus 27 billion a year ago. So their total assets have actually went up. In terms of liabilities, the only thing that kind of popped up to me here was these advanced ticket sales here, about 2.6. What's going to be going on with that, especially with people having to refund money and stuff like that. So that's something that I'd keep in mind, but those are current liabilities. The next thing that I was the most interested to look at, of course, was long-term debt and lease liabilities. Now there's a note on this one, and we'll just look at that one right now, and I'll read that to you guys. Now this first section, they kind of give a breakdown of the weighted average interest rate, the final maturity. So those are something that I'd be interested to look at as well, because I think it looks like the earliest one is coming in 2021. So if you think the recovery is not coming that quick, you should maybe be concerned about that. And at the bottom here, it gives you the total long-term debt lease liabilities here. It also goes and shows you in terms of the aircraft, the Air Canada aircraft, regional aircraft, land and buildings. So it really kind of breaks it down if you're interested in taking a really close look. The thing that I think a lot of people should be looking at is the maturity analysis. It says here, principal and interest repayment requirements as of March 31st, 2020 on a long-term debt and lease liabilities are as follows. Of course, they say US dollar amounts are converted using the March 31st closing date for Canadian dollars, of course. So if you want, you can pause the screen here. We have both the principal and interest for the years. It states down below here the corporation is committed to an additional aircraft and property leases which have yet to commence. The total commitment is approximately $53 million based on the estimates regarding timing of the deliveries and rent. The aircraft lease terms are 8 years and the properties are 20-year leases. So they actually talk about in the conference call that they are committed to getting new aircraft as well. So that's one of the biggest downsides, and I think the thing that people should be the most concerned about is if this pandemic continues for quite some time, man, they've got a lot of liabilities and maturities that are coming due in the future. So looking back here at the balance sheet, so that totals 9.6 billion, is actually up from over $8 billion a year ago. So their total liabilities are up as a result of 24 billion versus around 23.3 billion a year ago. In terms of their income statement, I like how they break it down here. Their operating revenues, passengers is about 3.1 billion. Of course, that's down from 3.7 billion. Cargo, I mean, they're focusing more on cargo. It's showing it down here, but I would expect next quarter that to be up to try to kind of offset some of the lack of passengers and other. So that's totaling about 3.7 billion versus 4.4. So that was the biggest hit in terms of what drove to their bottom line having loss this quarter. If you look at their operating expenses, of course their aircraft fuel, which would make sense, is down. But again, like I said, look till next quarter because this is kind of just the first tip of it as far as I'm concerned, and it'll probably be much more nasty next quarter. But it was 836 million this quarter and about 997 million a year ago. Wages were down slightly, but again, they furloughed like 20,000 employees. That seems to be kind of changing on a daily basis, whether or not the government's giving them money to hire them back, but I would expect that to be down. So that would be an operating expense that they'd be able to save on. But still, looking at total operating expenses, they were still down, by quite a bit, 150 to 200 so million dollars at 4.1 billion versus 4.3 billion. But that still gave them, with a lack of revenue above, an operating loss of 433 million, whereas they were positive a year ago. Now, when we look at non-operating expenses, they had a loss, which was quite significant. These were things that made difference for the earnings this quarter of $711 million, and that was versus $263 million a year ago. As far as I'm concerned, I think that has a lot to do, of course, with fluctuations in interest rates, and maybe even, I'm not 100% sure on that, risk management strategies there as well. Interest expense, they had about $129 million in interest expense. Of course, that's kind of what we talked about before. They have a lot of debt out, but it was a little bit less than $133 million a year ago. And then more in terms of risk management here, the gain or loss on financial instruments recorded at fair value, that was a pretty big difference too, at $34 million versus 8. But of course, these are risk management strategies that cost. It's kind of like the cost of hedging. So as you can see, the total non-operating expense was $843 million versus actually a gain of $158 million a year ago. So that made a huge difference as well. I mean, of course, we had less revenue, but the expenses, especially in the non-operating section, were quite great. So that's where we had a loss for the period of over $1 billion versus a gain of $345 million a year ago. But it's a little misleading unless you looked into it and really kind of understand what's going on. Taking a look at their cash flow to see what's happening with cash. One negative thing here again was that their cash flows for operating activities were actually negative in terms of being positive a year ago. Of course, operating cash flow here, what you're doing is you're taking net income and you're adding back non-cash expenses, so that's how you get to the bottom line there. But I'll do a video on that in the future. In terms of financing, they've got a credit facility and they have a huge amount of money that they've been borrowing. So proceeds from borrowings was over $1 billion, and they have more there to go. So that gave them net cash inflow of 387 million. And by the talk of the conference call, that's going to continue, but I'll get into that just shortly after I go through this. In terms of investing, they actually had an inflow of $68 million there, so that was a positive cash thing. So the cash and cash equivalents at the end of the period were 2.588 billion. So that was actually up from a year ago. Now, I also listened to the conference call, which had a lot of valuable information on there as well. A lot of this is kind of being public information, but some of it maybe you didn't know as well. As of now, or last quarter when they report here, I think they had about 20,000 employees there furloughed, so that's a huge amount. And in about March, they had about 85 to 90% reduction in operations. I think that's why the stock tanked so much after these earnings. Like, they were not mincing words on this. They were saying this is, a horrible situation. They weren't trying to sugarcoat anything. Q2 they expect to be the same, so it's kind of interesting to see what their timeline is in terms of this thing. So it seems like they think Q2 is still going to be affected somewhat. So that's like another 2-3 months going forward. Personally, I don't think things are going to be that extreme, but they might be conservative on this one. Q3 they're thinking about 75% capacity, and they're comparing this to year-over-year quarters, of course, right? So you can see by Q3 they think that things are going to definitely be turning around, although they did make a comment that they think it's going to take 3 years to get back to 2019 capacity. Burn rate was the huge thing that we're talking about. People are talking about how much money are they burning through daily, it seems. Well, they said in March it was $675 million. So they're saying $20 million a day. So this is why they need cash, right? The good thing is there's no more maturities for the rest of this year. Remember, I showed you that maturities chart. And also for Q2, the next quarter coming up, they actually expect cash to increase. But of course, that's because they're taking out debt against their airplanes and stuff like that, right? So that whole has something to do with it. So the question was kind of like, where do you think the low level of your cash would be? It was kind of ambiguous, but it sounded like they think the lowest that they might go is about 2.4 billion. Keep in mind they're at 6 billion right now. So that's plenty. That's a lot of money for a company that's trading at a $6 billion market cap, meaning the value of the whole company. So by my quick and dirty analysis that I've done on this stock, you might have guessed that I think it's a home run to buy it. Personally, and these are just my personal opinions, I got in around 20, so I'm up a little bit now. Should have gotten in earlier, but I didn't have the money sitting there, and I thought it would actually drop lower. That's another thing, don't get greedy. But again, I have like a 5-year or longer time horizon that I can wait. I don't think this is going to be over tomorrow. When we see the next quarter come in, maybe a lot of investors weren't anticipating that, and we might see another retest of lows or the stock tank. In that case, I'm just going to buy more personally. But in terms of the metrics that they have, the first part of the video, go back and watch that if you want. Looking at their income statement, their balance sheet, just the value of the company, I think it's a no-brainer that the thing is it's priced in too negatively as far as I'm concerned, and I think that's why things reopening as of the last couple of weeks, it's been skyrocketing among a lot of other things as well. Like I'm in Boeing now, and I'm in some US airlines that are just crazy. Like I'm up like 60-70% already, right? So you got to keep in mind, if you're wondering what's going on with the market, is that before things sometimes even get to their worst level, markets are already rallying up. That's what a lot of people, or even YouTubers that are on YouTube talking about this stuff, they're so confused, don't understand. These are forward-looking instruments, right? This capital market, the stock markets, right? So that's something to keep in mind. However, there's always surprises going forward. So that's where I'm at. I have a very small position, actually. I'd like to build more. I just think it might kind of come back a little bit. It could be wrong. So depending on what it does in the next couple of days, I might add some more. But I think, of course, long-term, it's a no-brainer. Could be some pain in the meantime. Would love to know what you guys think of this. If there's anything that I've left out, or what are your thoughts going forward? Like I said, personally, I think that people are just itching to get out there. And when this whole thing clears up, the demand's going to be phenomenal. And that's just my opinion. And I think it's going to come a little bit faster than people think, unless we see a reemergence in the fall. So again, let me know what you think. Comment down below. Guys, don't forget to like and subscribe. It really helps the channel. And that's going to be it for today. See you in the next one.